Hi guys, and thanks for tuning in to another episode of the Ask Nugget Show, where I do my best to answer all your crypto questions. This week's first question comes from Crypto Andy on YouTube, and he says, can you explain tokenized securities? Good ones to look out for. This is going to be a growing trend, and do you need to be an accredited investor? So great question. I'll continue to cover this on the channel in the future, but recently I did a long podcast with Anthony Pompliano, who's all over this area if you want to listen to that as well, and I'm planning on doing a top 10 security tokens video in the future. But as an introduction, most people are pretty familiar with cryptocurrencies as being forms of digital money like Bitcoin or Litecoin and so on. And then we have second generation utility tokens or platforms where we're not really buying a digital currency and we're not really buying a share in a company. It's more that utility. So if I buy Ethereum, I'm hoping that people are going to use that platform. And as we build Web 3.0, there'll be more and more use case for Ethereum and so on as we go down all the other platform-based coins. Now, equity is a little bit different, and we're trying to offer digital versions of shares using blockchain. And it's a bit confusing because it all falls under this term of cryptocurrency, but they're not trying to be a currency. It's basically, as I said, just that digital tokenized representation of shares. And we all know those benefits of being able to fundraise globally through that manner. Now, where it gets difficult is all these regulations and laws depending on what country you're in. And we see some people moving to Malta and based out of the Cayman Islands and so on. Now, in the US, the regulation most people are familiar with is Reg D, when you go to do fundraising like an IPO on the stock market. So Reg D, you do have to be an accredited investor. And then we have other regs like Reg A, where I think you can raise less than $50 million, Reg S, if you're outside the US and so on. So again, they're the laws for the US if you want to read up more about them. In Australia, we have regulatory bodies like ASIC and consumer protection laws, but I've participated in IPOs in the past, and I'm not an accredited investor in Australia. So it really does depend on what country you're in, and that's why we see all these different tokens being based in other countries. Now, in Australia, I was very excited about an IPO that was getting into Bitcoin mining back in 2015, I think it was, and that would have been a really great investment, but they weren't allowed to list because of strict laws in Australia, and blockchain was a dirty word back then. But yeah, in Australia, you can participate in certain IPOs without being an accredited investor. So those rules will apply to security tokens in Australia as far as I'm aware. But as we said, in the US, a lot of people are going to fall into that Reg T category where they're not going to be able to. Now, once they're out there and trading on these different exchanges, as I said, I'm going to talk about these projects. Polymath, T0, Swarm, Raven is another one that's been talked about recently. So once they're out there in the ecosystem and freely tradable, again, are you going to have to be KYC'd and verified on that exchange? And what countries are going to allow accredited investors versus normal investors? And this all remains to be seen. If it's an ERC20 token, well, anyone can send it to anyone in theory. So this is an exciting space. We still don't know how this story is going to play out, and hopefully I'll keep you guys up to date with all that. The next question comes from Jan on YouTube again, and she says she'll be moving down to Launceston in Tasmania and wondering what the crypto scene's like and crypto meetups in general. Is there a blockchain center? So no blockchain center here. There's one in Melbourne. They're talking about building one in or similar incubators in Perth and Brisbane, and Sydney want one. So it's exciting to see that space developing in Australia. As far as crypto meetups go, look, I was really happy and proud that we went around Australia for free. We visited just about every capital city and met hundreds of people and made those great relationships. We'll continue to do that again. Maybe in a bull run, there'll be a few more people turn out. But join your local crypto meetup. The first meetup I went to with Adam, if you're watching, was the two of us, and it was that way for a couple of years. But crypto communities are building now where there's dozens, and then all of a sudden there's 100 people at your local meetup. So join local Facebook groups, join local meetups, meetup.com. There's so many ways to get involved in your local community now, and we definitely have plenty of crypto meetups in Tasmania. So yes, we will be organising one. Follow us on Twitter and all our socials, and we always put out that information on those meetups. The next question here comes from Jarrett on YouTube, and they're asking about the total market cap. How can it drop from 239 billion to 202 billion in a 24-hour period? And yet the total trading volume only says it's 18 billion. Shouldn't it be higher due to the drop? This is a great question, and one we get asked so often, whether it's about the total market cap or individual coins. And you see those numbers and you think that $37 billion has technically been removed or traded out of the market that day, but that's not how it works. It can be very misleading, and that's because you have to understand concepts like volume, liquidity, market depth, different exchanges, all that sort of thing play a role to how accurately we can estimate what money is actually flowing in or out of one coin or the entire market cap. And the best example I can give for you to get your head around how this works is, let's say that there's a project out there that only has 20 coins and they're valued at $1. So the market cap is $20. Now, 9 people put those on their hardware wallet, they're hodlers and they're out of circulation. So there's only 19 people, so there's only 1 left in circulation. So that one person decides, yeah, I'm going to sell it because someone's offering me $2 on an exchange. So the last traded price for that coin and that project becomes $2 now, up from $1. Now, there's 20 coins in existence times the last traded price of $2. So all of a sudden the market cap's grown from $20 to $40. Even though only 1 coin's been traded, only $2 has been paid. On paper, and in theory, the market cap has doubled. So I hope that's a really basic example that illustrates why money that flows in and out of projects isn't always a very accurate representation. And we hear these numbers of total crypto market cap going to, trillions of dollars and so on, and it doesn't actually mean that we have to have trillions of dollars actually go into that. It can just be the price that people are willing to pay for certain tokens that can drive up that theoretical total market cap value. So I hope that makes sense. The next question here comes from Gino via email, asking about converting directly from Bitcoin to gold on your hardware wallet that I mentioned in a video recently. So unable to find how to do this, and what's the scenario where you would do this if there's a huge surge in gold? Can you let me know? Okay, so what I was talking about was the Kyber network tutorial that I did recently, and now you have the ability through all decentralized exchanges. I've covered, Radar Relay, Ether Delta, and getting your head around how to use MyEther Wallet, where Kyber is now directly integrated. But what this does is give you the ability to plug in your hardware wallet, your Ledger, your Trezor, even that Ecomi wallet I covered last night, KeepKeys, another brand. There's so many brands of hardware wallet now. And in the future, we'll be able to plug in to those websites just by plugging in our hardware wallet to our home computer and trade directly. So if I've got my Bitcoin and I'm happy with the price, it's gone up to $20,000 again, and I decide I want to sell for some gold, we now have a lot of projects that are digital versions of gold. So DGX is one that I've covered on the channel if you want to check out that full analysis, but DGD is the project or the governance token, but DGX is that token that they sell that represents 1 gram of gold. So I can take my 1 Bitcoin, I'm happy it's going to $20,000, I can sell it for $20,000 of gold, and that goes into my hardware wallet as DGX tokens. My private keys on my wallet, it's all safe, nothing's ever actually been on the website per se, it's all done on the Ethereum blockchain through Kyber or Radar Relay, whatever protocol you want to use, guys. You can now trade that, and in the future we've got exciting projects. I've heard about some in Australia that are doing different metals backed by crypto and so on. So there's so much on the horizon, stable coins, gold, silver, whatever you want to sell out into, you can do that from your hardware wallet, and I'll continue to do tutorials about all that stuff in future. Final question comes from our crypto community, and that's being asked about hidden orders. So how do they differ from OTC trading? So OTC trading stands for over the counter, and that's, you hear, the whales trading and the big players behind the scenes doing these huge orders, and they negotiate it with people like Caleb and Brown and HiveX that we covered on the channel the other day. How are they different from hidden orders? So I think you're referring to, say, Bitfinex. I think BitMEX as well have a hidden order option where you can place a big buy or sell order, but basically hide it from the order book. Now, I've done a detailed video on buy and sell walls. They can often scare people or people feel that the market's going to be pushed in a certain direction and so on. So some people don't want others to know that they've placed a big buy order or a sell order. So they can place that order and it's hidden in the book. Now, often you'll have to pay a slightly higher fee if you want to hide your order from other traders. But what it means is you might see that there's no buyers stepping in or support on an order book on an exchange, and yet people will continue selling, and it just, let's say Ethereum's at $200, it just doesn't go below that price. And people are selling and it's just staying at $200. Now, that can show up on charts or just by visually, when you're looking at that order book. But what that means is that there's a hidden buy order at $200 and someone's just sitting there and just getting their order filled slowly in the background, and people can't actually physically see that order sitting there. So that's a hidden order. Again, that does show up as volume on the charts and so on, but that's very different to OTC trading, which happens, off the websites, off the charts, behind the scenes, and it's negotiated person to person or company to company. Great questions again this week, guys. Thanks for tuning in. If you love chatting crypto, check out nuggetsnews.com.au or consider joining our crypto community, and I'll talk to you again soon. Cheers.